In today's video, we're going to be talking about a Pi cycle top indicator update because we've seen a sizable shift in the trend when it comes to the Pi cycle top indicator. Let's talk about that in a bit more detail because this orange 111-day moving average has been broken as a resistance. So let's dive right into today's update. Subscribe to the channel for more videos like this in the future. Like this content if you enjoy these videos, and let's dive right into it. So historically, in a pre-halving year, so 2015 for instance is a pre-halving year, oscillation around the 111-day moving average before we finally break above it into a new bull market and hold that 111-day moving average as a support. Next pre-halving year, prior to 2020, for instance, we oscillate also around this Pi cycle moving average, this 111-day moving average. Even in the halving year, we were seeing a lot of downside volatility below the 111-day moving average. Arguably, if this black swan didn't occur, maybe we'd be well on track to just maintain bull market support at this fantastic moving average all the way to bull market peak in 2021. So oscillation is the name of the game, but then in the halving year we hold above this moving average all the way to new all-time highs, and once again oscillation in this region in the pre-halving year, and then after the halving, once we retest it as a support and continue to hold it, we don't look back and we rally to new all-time highs. So in this current cycle, we've been seeing in this pre-halving macro accumulation range we've been seeing price around the Pi cycle moving average. We've been seeing oscillation, downside deviation below this Pi cycle moving average, upside deviation beyond it, dips below it, successful retests, successful breakouts, and a successful breakout once again right over here. So this Pi cycle moving average tends to be the area where we mean revert. So mean reversion occurs, downside deviation, and then we revert back to the moving average and then break back above it, and then we revert back above it. This has been the case over the past year, really, 2023. Upside deviation, mean reversion, back into the moving average, then upside deviation, and then mean reversion and downside deviation, mean reversion and then upside deviation, mean reversion and downside. So now we've broken back beyond it, and it's important to note that this could be the point of retest should we drop into that Pi cycle moving average, because we've been seeing mean reversion to this moving average all year now, and we're getting closer to the halving, but we're not in the halving year just yet. So why not potentially see some sort of oscillation back into the moving average, because we've seen that in the past. We've seen upside deviation, for instance, in the halving year. Even pre-halving year, we were upside deviating, lost it, and downside deviated. But even in the halving year, we upside deviated and actually went for that retest, and then saw that upside deviation occur again and then retested that as well. And 2015, we saw price just mean revert to this moving average throughout this bull market, holding as a support right over here. So why couldn't we do that in the coming weeks or even months with 28k, which is where this moving average is currently representing price? 28k being that mean reversion point for that retest of the moving average. But the thing to note about this moving average, just notice how it changes over time. It represents higher and higher prices over time. So from January 2023, we can kind of try to guesstimate this was maybe 18k, but now that's 10k higher. 28k is where this price point is being represented, the Pi cycle moving average representing price right over there. So over time, and in fact we're already seeing flicking up in this moving average, so over time we're probably going to see price, or at least the moving average, try to follow price. So if we do start to stagnate or move towards the upside and then perform a pullback, rest assured we'll probably see price really try to retest this level. And the reason I'm mentioning that is that 28k is where the pi cycle moving average is residing right now, price-wise. But if it continues to incline, why couldn't this pi cycle moving average represent 30k or 31k over time? And the reason this is quite important is because 3600 is the range high of this reaccumulation range that essentially was a home for Bitcoin for most of 2023. Essentially from 25,900 to 3,600, we've been seeing rejection from the range high, retests of support, rejection from the range high, retests of support, and then breaking beyond here in recent weeks. So a rally towards the upside is still nothing that we can exclude at this point in time. 35k is the key resistance, as we've been talking about in a previous video. So a mean reversion back into this reaccumulation range top, that would be a retest, post-breakout retest attempt, which hasn't happened yet. And if it does take some time, and historically it does take some time for a mean reversion to occur, just look at this cluster of price action or even this cluster of price action. These are generally periods of months, maybe, definitely several weeks before we touch that pi cycle moving average as a support. So those periods could last weeks, if not months. So if we do even rally here towards the upside, reaccumulate or something, or even distribute actually on a local topping situation, then this moving average could be a point of retesting. So as price goes up, the moving average will go up as well. So this region would be a next major support region to retest, because it was an old resistance and maybe it could act as a new support going forward. Generally speaking, this was a resistance area for price. So this old range being a resistance and supply zone could be an area of demand and new support going forward. So a pullback into this range, whether it's just the very range high of that range, so 3,600, so maybe even 31k, because of course 32k was that local top for a while, so 32k is that support. But generally on the weekly time frame, this is the major support region around 31k. A pullback into that would be a retesting zone, but still downside volatility on a retest, that could be a possibility. And it really does depend on when price performs that pullback, because we're right now at 35k. That's a key resistance area, and if we do reject from there, then this region could be a possibility, a very real one, because we haven't deviated to the upside too much away from it. It would be perfectly healthy and natural to see and organic for price to retest that level after a breakout. But if we just continue higher into 40k, 42, 45, then it'll be a bit more difficult to tag that 30k region for a retest. Though if we do get some black swan event take place, in general 4-year cycle tendencies repeat, in the sense that we see some sort of crash into the mid to low 20k levels, then that would be something really interesting to see. But it really does depend on where price local tops, and this general range being a support region. And it would be really healthy for structure to hold above 31k, but dipping into this range, that would be just an additional boost to liquidity. But in the absence of a reaction from here, that would be actually worrying. So it does depend on how price reacts going forward. But in any case, we tend to mean revert to the pi cycle moving average, and we tend to also downside deviate beyond it. So any deviation to the downside below this pi cycle moving average, that's essentially a bargain buying opportunity. We've seen that in the past, whether that's a long range or a very short range and short deviation for a very short time. Anything below this pi cycle moving average is bargain buying territory, because in the halving year, we inevitably hold this moving average as a new support, and we hold it for the entire bull market, essentially. So let's cherish these opportunities once we do have mean reversions and downside deviations and successful retests of this pi cycle moving average, because at some point in the cycle, after the halving in particular, we're going to hold this pi cycle moving average as a support consistently. And that could be, of course, a reaccumulation period whenever we retest those moving averages, as we've seen over the past few cycles. So after the halving, successful retest of the pi cycle moving average would be reloading time. But before then, downside deviation below the moving average, that's bargain buying time. In any case, that's about it for today's video. I hope you enjoyed this one. Subscribe to the channel and like this video if you enjoyed this video in particular. Thank you so much, and I'll speak to you in the next one. Speak to you soon.